For Global Business Update, Michael Wilson joins us now from London. Good morning, Michael.
Good morning. A relatively quiet start as far as the markets are concerned this morning. This is mainly because there's a very short trading week in the United States. It's July the 4th tomorrow, Independence Day, as you probably know, as far as the United States is concerned. Thus, the markets are closed. However, there is still some important stuff. Just let me run through where we are at the moment as far as Asia Pacific is concerned. Hong Kong slightly up. Nikkei dipped about 1.5. The mainland China stocks up between about 0.75% and 0.2%. So not a great deal of movement there. However, there has been a private survey, the Caixin survey, out in China, which is pointing towards business confidence actually lacking now, and also factory activity slightly cooling off. Now, again, I don't get too alarmed about these kind of figures. I think this is waiting for some more positive action from the Chinese authorities. And one of those, I think, and I don't know, but I'm guessing, is the appointment of a new party secretary to the China Central Bank. He's Pan Gongjiaheng, and he will head. He's the former head of China's Foreign Exchange Committee. Now, what that suggests to me, although the market is not expecting a larger stimulus in the near future, I think this cements really political control over China's central bank, if you didn't feel it was there already. So, and that sort of appointment says to me that maybe there will be some sort of accommodation for the rest of the economy coming up. Singapore, once again, now the deputy prime minister has become the head of Singapore's central bank. If you remember, we've talked about, he's called Lawrence Wong. We've talked in the past about a high risk of a Singapore recession hitting that very important country. Growth about 1.5% of this year. Nothing so much to do with Singapore, but basically because of its position in the world, it's down to external weaknesses rather than Singapore itself. But I think that's a fairly important announcement. And also, here's some further support from overseas investors for India. The question is, will it be the next China? Well, probably not, but it's very, very different. And it should actually be growing over the next few years quite considerably. It's a very infrastructure keen country. It doesn't actually get there right now, but there's a lot of entrepreneurs there, and a change in the tax structure as well speaks quite well for the future of India. So investors actually rather liking that. Let's turn our attention back to the United States, and all reported for nearly 500,000 deliveries, much more than was expected by analysts. This is the crossover vehicle, the Y-Class crossover vehicle, and the entry-level, the so-called entry-level A-Class sedan. The thing is, what they've achieved here, apparently, is not as a result of price cutting, although that's still something which other manufacturers are wondering where Tesla's going to go with all that. Twitter has been limiting the amount of tweets it's been allowing on its platform. This is straight editorial control. There was a feeling that a lot of data scraping, as they put it, had been taking place, and people were bombarding it with their own opinions. And it felt as though they were getting an undue influence over Twitter. So it has actually reduced the amount of tweets that people can actually have. I should remind you, of course, Elon Musk no longer the CEO of Twitter. He's actually stood down, but he's forever identified, presumably with the start of the company. Now, Apple, we've talked about Apple, haven't we? And about this headset, the Vision Pro headset. Turns out that production difficulties, and also it's very, very complicated to make. And it's quite a gamble for them. It's as big a gamble as the iPhone was all of 10 years ago. It was promising 1 million headsets. Now it's down to, I think, 400,000 next year. So there's a considerable rollback in the expectations there. It will be over $3,000. It will be expensive, but then again, Apple products tend to work. Let's leave it to them, see how it goes. But anyway, they have reduced their production targets. The EU is going to allow a Russian bank. This is the agricultural, the Russia agricultural bank, to access the SWIFT payment system. If you remember, Russia was excluded from that. What they want to do, what the EU wants to do, is to work out how they can get grain paid for and out of Ukraine. And a lot of it depends on the Soviet Agricultural Bank, or the Russian Agricultural Bank, rather. Again, these discussions are taking place as we speak. UK and the continuing travails of Thames water, that could hit foreign investment. That's what they're saying at the moment. They need £1 billion more or less straight away, and you won't be forgetting the fact that they have a mountain of £14 billion worth of debt right now. So a lot to do there. And also the energy boss of the International Energy Authority, there he is, Fatih Birol, has been saying that maybe the UK and other countries as well will be facing a sharp spike in prices. If China demand comes back, that will raise energy prices. If the coming winter is relatively harsh, the same will happen then. I'll talk to you briefly about oil and gas. Shell is saying that, if you remember, they have been, or at least over the weekend, they were certainly criticised for dealing with Russia. Their excuses, their defence is that a lot of these contracts, yes, they have responded to the general overwish of the EU, the EC and so on, but there are various complicated contracts which are forming which are keeping them actually going and dealing in Russian gas at the moment. Price of oil round about $70 a barrel. Again, what will OPEC Plus make of this? Will they want more production? I suspect they probably will. Are they happy with the price round about that level? Suspect not, but we'll see. And gold, really, that's still remaining round about its $1,900 an ounce kind of level. And because inflation is seen to be gradually, I say gradually, falling, we don't expect a lot of price action in that market this week. But we will see. That is the global view.
Okay, I'd like to talk about Thames water. So what is going to happen now? Is it that the government will need to step in yet again? Because the bunch of investors that own Thames water, which also involve the Canadian pension fund and all of that, somebody will have thought that they could have hedged their business against the challenges of modern-day Britain. But obviously, they cannot. So will people have to, other people, the government, taxpayers' money, have to pick up the fall for them because they cannot hedge their own business, despite, and underline this word, despite the fact that they've been taking humongous profit out of the business?
It has. I mean, if the weekend press has been full of stories about the so-called the vampire kangaroo, which is Macquarie Bank, that's what they call the Australian bank there, which when you look at it on a piece of paper, Rufai, it looks like an extraordinary amount of financial mismanagement. The problem is, I don't think the regulator comes out of this very well indeed, nor do I necessarily think that nationalisation is the answer. It often isn't. People look back to where it was in the past. Actually, in the past, if you really look back at what happened with nationalisation, that tends to be run for the benefit of the staff rather than the customers. So I'm not sure that's seen to be the answer. I think if the regulator were to be reformed slightly, I mean, this will happen to all the utility companies. They go between being privatised and then coming up against the regulator, which is demanding more and more. Something needs to break there. The trouble is that given the fact that we are not suffering water shortages in this country, so the consumer, him or herself, is not suffering as much as they might. Therefore, as a voter base, politicians think, OK, we'll kick the can down the road. I think that's what will happen with this. I think they will eventually get some sort of foreign investment, but it's a long way away at the moment. And this is precisely why I quoted this warning this morning.
All right. OK, so just before we bring on Rotus, I believe I have one question for you very quickly. It was just your statement or your analysis of India becoming the next China. And even though you're not optimistic about that, but some analysts are watching India very closely. especially like you mentioned, reforms in their tax structure, but also the digitization, monetization of their economy. Remember just earlier this year, the Indian Prime Minister Modi was in the US for a state visit. We see more investor interest in India. They have population on their side, and S&P Global and JP Morgan have said at the end of this decade, they'll be the third largest economy in the world, ahead of Japan and Germany. Do you still think that in the next few years, China might have heavy contention with India?
I'm only going by what these investors are actually saying. Personally, I think that India has a long way to go in the same way that China does, because both those countries have a sort of crust of high spending, entrepreneurial spirit there. And yet there is an enormous amount of poverty in the country. The same is true of India as well. I think both countries look like wonderful investments. And you're absolutely right. The United States has laid out the red carpet to India. What they're hoping for is that it will bolster the United States against what they consider to be the continued attrition of China. And yes, if you say to me, so why is Janet Yellen talking to China? Well, mixed messages is the way of the world. Polarization is not where we are. Globalization, I think, is probably where we still are. So as far as India is concerned, yes. I mean, what they need to do, and this is terrible, an awful way of putting it, unfortunately, for the ranks of poverty which is still in the country. But what they need to do is get the middle classes on their side in terms of these tax reforms and get them spending. Hence, Apple opening the two consumer stores in Indian capital cities. I am optimistic about it. I don't think it's the next China, and the only reason I don't think it is that we haven't really seen how China is going to come out of this post-COVID recovery, because it is happening very, very slowly. But as I reported this morning, it looks like there's going to be more political control of the central bank in China, which, to my untutored eye, would push the economy towards being more accommodative to getting out of the problems it's in at the moment. Okay. But I don't think it's going to be the next China.
Okay, Michael, I have a list of about 4 or 5 things, but I'll be very quick. 1, Lawrence Wong has been made the chairman of the Central Bank of Singapore. What does he say? He's been deputy chairman of the MAS before. What does he say about the independence of the central bank, in Malaysia, the monetary authority of Singapore, as it is otherwise called? That's number 1. Janet Yellen is visiting China. Not too long ago, Anthony Blinken was there, and he met with President Xi Jinping. Should we expect any breakthroughs? That's the question. And number 3, in the UK, the Chancellor, Jeremy Hunt, has been saying local government is frowning at banks, money deposit banks, closing accounts because people express independent views. And Nigel Farage has been a victim in this regard. Should banks get involved in this matter of free speech, as banks, not just one bank, 2, 3, 4 banks are doing in the United Kingdom? Isn't that going beyond business to get involved in politics?
Couldn't agree more. I don't think banks should get in the way of that at all. What banks should be doing is speeding up the way that high interest rates apply to savers. That's what their job should be. Their job is not to get involved in politics. I know that HSBC would probably have a difficult time with that, but that's on a global scale. I feel that for banks to get involved, because you can go all the way down the line. I mean, if you really want to go, you'd have to ask yourself why prominent members of the Labour Party, for example, presumably have bank accounts. What's wrong with that? What's wrong with having a bank account? I do feel as though, I don't think the full story of this has come out, but it's clear that they've been handling very, very badly indeed. No, nothing concrete out of Janet Yellen going and talking to the Chinese. I don't think. What has happened to Blinken's supposed cooperation between the two countries? I think it's a general drip of diplomacy and trade. I have no expertise in that. I don't expect anything concrete to come out of that at all. As far as Singapore's concerned, again, no big change expected there. But here was an economy. If you look at a couple of months ago, my reports from a couple of months ago, have a look, Google it up. You'll find there that there was a lot of concern that Singapore is facing a recession this year. I suspect this is what this new person is going to try to avoid. Whether he achieves it or not, different matter. But it is a country with a strong trade growth, and it's very much dependent upon the rest of the world. I can't say any more at the moment, but I think it's something that we should keep a very close eye on.
Well, okay. Any breakthrough from Janet Yellen's visit to Beijing? You think there will be any breakthrough? Anything significant? Or just the same platitudes about, we'll continue to engage China?
As I said, same platitude. I don't think there's going to be any breakthrough at all. I don't think things happen like that. There's no need. There's no pressure for an immediate breakthrough. I suspect it's just more and more of this non-polarized way in which the United States is dealing with China, putting the red carpet out for India, talking diplomacy to China. I suppose it's something that they should be seen to do. I think if you really want to boil it down, I suppose it depends on it adds to domestic politics, but I don't see any breakthrough coming there.
Well, thank you very much, Michael Olsen. Now for business updates across the African continent, Rochus Odiri joins us. Good morning, Rochus.
Good morning, Doctor. Good morning, Ayo. Good morning, Rufai. Good morning, all our viewers. Yeah, we're focusing on rail today in Nigeria. Some data coming out from the Debt Management Office with respect to the amount of money Nigeria is spending on servicing debts for rail. Came out to $62.6 million in the first 3 months of this year. If you take a look at the breakdown, Idu Kaduna, 23.1 million, Lagos Ibadan, 15.4, the Abuja Light Rail Project, 24 million. So you put that all together, you come out to 62.6. So these are your liabilities. This is what you are using, this is what you are servicing with respect to how much money you took out in loans in order to get these trains on the rail system doing what they're doing. Then, of course, you now look at the revenue side of your income statements, if you will. Now, key thing here, we had a decline in passengers, the individuals who are supposed to be paying for their rides on this rail. So first quarter of last year, 2022, 953,000. We're actually pushing towards having 1 million passengers in the first quarter of last year. You can see the massive decline there in the first quarter of this year to 441,000, a 53% drop. So what happens if you've got a 53% drop in passengers? Well, your revenue is going to take a big hit. So you had a first quarter revenue of roughly 2 billion naira that came in. That fell to 768 million. And if you want to do the calculations in dollars, depending on what the exchange rate. Actually, not the new rates, because this is the first quarter from January through March of this year. We didn't liberalize until June 14th. So, but still, I mean,
Rosus,
if you want,
the new rates.
you can play around with the new rates if you want.
If you benchmark the parallel market first quarter 2022 and parallel market first quarter 2020, the thing had gone up.
Oh, it's gone up, of course.
Remarkably.
It
has bizarre.
Oh, yeah, it's gone. So we continue to refine. We also look at some more figures coming out. It's tough. We look at some more figures as well as the challenges that is being faced by your rail sector. So this is the thing. You've got Naira revenues and dollar debts. If you are, I mean, this is a recipe for any business to fall underwater. If you are earning money in Naira and your liabilities are in dollars, your Naira revenues have to be double, triple, quadruple what you're making or spending in dollars, because you have to make up that cost. Then, of course, you've got the declining passengers and the revenues. Then this issue of manual ticket sales.
Can you imagine that? Manual ticket sales.
Until today, we are still facing, where money is being, it also allows for corruption. If you're not, you know, because money is being diverted, you can't really track it. We should be doing e-ticketing. And then, of course, you got the terrorism and vandalism. People are still stealing, you know, stealing equipment from the rails. We had, of course, that terrible terrorism incident from last year. So you put all this together. It's a shame I didn't get the clip from an interview we had on the Global Business Report. You got to get the private sector in here. I know that the states will still take majority of the control, but if you look at how NLNG is being run, the dividends we get there with the private sector oil players that manage it, you look at what happened with telecommunications, where it's mostly private sector. Look at Thames. Michael Wilson talking about Thames and their debts. This is real quick. South Africa, they've Mr. Ramaphosa, the South African presidency, increasing public sector officer salaries by 3%. Their own revenue outfits recommending that. So I think that's for fiscal year 2023-2024. So that's our...
Real quickly, I'd like to talk about rail, you know, and that's why God help us in this country. You know, when those humongous debt were taken off for the rail, the contracts were very nebulous in the first place. And I remember I kept on asking the question of what's the cost per kilometer.
Right.
We couldn't come down to the exact cost. Our cost of rail, marginally compared to other countries, is really high.
Very high, that's right.
So you have all of that shenanigan going on, then coupled with how you recoup the money. I mean, Rotus, it's a shame. It is shambolic. What word can I use? It's a complete reflection of the omni-shambles. That the very first thing we ought to have done, have e-ticketing, we couldn't do it. And we kept on giving all sorts of funny excuses, you know, that is something you cannot, even a cow that has mad cow disease will not give such excuses. That we couldn't just fix e-ticketing from day one, and we left the ticketing to ticket touts.
That's right.
And the likes. So I think the earlier we fix e-ticketing, the better. And that's why the private sector should come in. If possible, bring in the private sector to handle the value chain of revenue, to collect the money. Partner with you have the pay stacks of this world and everything. Let them set up their structure so they can help you collect revenue and remit to you and get a certain portion out of it.
Agreed.
To take that out. Also, going forward, we must be able to bring private sector in such a way that they can also build rail lines in Nigeria. The likes of the rail lines built in America were built by the Vanderbilts. All they asked was for right of way. Cornelius Vanderbilt and the other rail owners. So we can get to a point where we can get the expansion of rail line done by the private sector. A case in point I still keep talking about, there's an old narrow gauge line that goes through Abeokuta that stops at Dugbe. People can revamp that line and use it to carry agricultural produce and make money from it.
Agreed.
So that's that one over there. All right. Coupled with the fact that we don't have technological equipment to be able to act as security and surveillance. Till date, Rotus, I don't know, you can tell me, have we been able to sort out that security platform we ought to have put on the rail that we couldn't put in there that Rotimi I mentioned complained about when we had that attack?
Not to my knowledge. They're still working on it. They're still working on it.
Okay. All right. So just the security issue, and just where Rufai ended with regards to one of the things that were highlighted in terms of why the rail project hasn't quite worked. And these debts were from China Exim Bank, aren't they? So we are indebted. And as was said in the report, I read the Guardian report about a month ago with regards to how it was shrouded in secrecy until the bubble burst and we need to pay back. Are there chances of us defaulting? That's the concern for many Nigerians. And then what are the implications of defaulting?
Yeah, no, look, I mean, there are individuals who can pay $63 million out of their pockets, right? It's not that high. The issue is that your revenues are lower. By the way, I didn't even put the show, so I added this to the challenges. The tickets are not cost reflective. There's a subsidy issue with those tickets. Highly subsidized, So, I mean, look, it's the same issues over and over again.
Okay, all of these issues were brought up by Rotimi Amechi when he was Minister of Transportation.
Well, he didn't fix them.
These are not new.
He's bringing them up.
He kept complaining that the ticket sales were not cost reflective.
Yeah.
And that we faced a serious situation, right? And that government was subsidizing the transportation, rail transportation. The bigger issue is our indebtedness to China. We are indebted to China to the tune of
it's in the
over
billions.
111 billion. This year alone, in Q1, the debt management office says to maintain the railways, we have had to pay a debt of about 63 billion.
Okay, no, total public debt is 100 billion. That's our total public debt. But China accounts for about 40, almost half of that.
But for railway,
dollars.
We are told we have, according to DMO, you can double check the figures, about 63 billion.
Right.
Now, if that is the case, Nigeria, I hope, will not find itself in the same situation later with Djibouti, with is it Zambia, where under the Belt Road Initiative, China will come and say, oh, you can't pay your debts.
So give me those
we
assets.
now have to come and manage your assets for you. That's a big fear there.
Yeah.
But the other issue that I wanted to bring up with you is our external reserve, which has fallen by 2.9 billion in the half year 2023. What are the implications? Because it's the largest drop, we're told, since 2015.
Right.
Yes, and there has been a downward trajectory with regard to our foreign reserves. And the report that I read tells me that, look, this is despite Tinubunomics.
I thought it was Agbadonomics. That's what I thought. I heard it was Agbadonomics. That's what
it depends on the label you use. Despite Tinubunomics, that's the fuel subsidy removal, all the other policy reforms that this administration has adopted. So what are the implications?
So the implications are, one, your reserves are supposed to cover imports. So that if it's dropping, then you can't cover as many imports. Your import cover, right, which is in a matter of months for Nigeria. Two is being able to defend the currency. But Tinubunomics, thankfully, in June, liberalized it, which means that by managed floats, you won't have to defend the currency as much as you would.
How much are we spending on defending the currency now?
Well, that's the thing. We sold about $26 million or so in the last quarter. So it wasn't that much. So you'll be less defending it less.
How much are they spending? So we know
that. So I have to get into that. All right.
Thank you very much.
Thank you.
Anyway, economic stability issues.
Yes.
That's what we face.
Indeed.
That's how to summarize it.
Agreed.